Okay, welcome to Swing Trading with Cycles. We're going to do our update on precious metals today. It is November 21st. It's about the middle of the day. We'll start with gold. We'll start with the daily chart. So we have our top on this potential day 8. If we're saying this is our daily cycle low on day 27, as discussed in previous videos, definitely take a look at the link in the description. So we have this like really furious rally, right? Big green candle, small consolidation, big green candle, small consolidation. And then we just topped out, rolled over. This is day 4 of the rollover since this swing high was confirmed from day 8. So this is day 9, 10, 11, day 12. And as I say, the cycle counts are less important than the levels in the market structure. So your next really kind of level of really have to hold is 1700-ish, right? You can see that's this line here. Below that, you're really starting to give back pretty much all of this move. I mean, I think the way to kind of think about it is, you know, this move here is $168, right? So once you get right, like something like that, yeah. So that's about 50%, like the 50% retracement, if you will. So that is interesting, and even that would be like not ideal, but I mean, not the end of the world. And if we look on the weekly chart, and this is what you would expect, it's like when things happen matter. This is now a swing high, right? I mean, we have a lot of week to trade, so this could definitely come back with a furious wick, lower wick, you know, like for a rally. Like let's say we hit that 1700 level or close to it, and we get kind of a furious bounce. But as of right now, by going up below this is setting this up as a swing high, a bearish swing high. And this was kind of set up that, I mean, when you get a candle like this, which is like a shooter, you have the upper wick, which again always indicates a pullback on a lower time frame. This is generally what you expect, the bearish follow through. You don't always get it, and when you do get that bullish candle, it can catch people off guard. But again, there's a lot to trade today. It's only Monday, or excuse me, this week. It's only Monday. It is a short week, to be fair. But you have this whole huge candle, which has a low at 1664. Not to say we're going to test those lows, but that's a simple way of kind of thinking about it, right? Like that's what the move is. This huge big candle. We're still in the upper end of the range of that candle for now, right? And this is your 200-week moving average, that yellow line. That's important to just kind of take a glimpse at, if you will. And in terms of the cycle count, right, like this is like some kind of furious triple bottoming pattern, which is really strange, right? So you could call this week 15, right? After, like, you know, this is a short 15-week cycle after this long cycle that was 31 weeks. That's the cycle that topped out with the war-fueled rally, right? That was all the way back in, March, right? And then, you know, we rallied for 12 weeks, and then we declined for, like 19 weeks. That's rough. And then we had this other bearish cycle that was really short into 15 weeks. Who knows? The way this shapes out, maybe this is still one longer cycle. We'll have to see. But the point is, this was consolidation. Definitely looked like a bear flag. Absolutely looked like a bear flag in real time. You even have your little false breakout here above the 10-period moving average. But then you get this move here, right? Like that is a classic sort of this pattern failing, right? It's a failed bear flag, essentially. We consolidated this down move here, and then boom, went up here. So this could be really interesting. I think you gotta watch the levels, right? Right now, we're still in the range where you know there's no reason to get overly bearish. And if we look at the monthly chart, what we're setting up here is for an inside month next month, right? So we're setting up for December being an inside month, like pretty much guaranteed, right? Unless we erase this whole down move, you know, like in the next several trading days, which seems kind of unlikely. We're probably going to get, right, a monthly candle that is inside the range, like the December candle. I should say will open. They can't say anything about how it's going to close for sure, right? But you get a sense of like what the bias is going to be. It's going to, and it depends on where, like how much more of a pullback do we get, right? Do we get down to like here, that 1700 level? That would get you closer to like the midpoint. And then we have to see then we have our lines are going to be pretty clearly drawn, right? So the high for this month was 1786. And this is the gold CFDs, not the futures. And the low was 1616. So pretty ginormous range. but we're going to be inside that range, and so it'll be important to look at obviously lower time frame signals, but it just gives you a sense that in terms of trying to confirm, was this our 8-year cycle low, we still have some work to do, right? You can't declare, yes, it's an 8-year cycle low, and you certainly can't say, oh, for sure, the cycle is still declining. At this point, we need more evidence, is what I would say. And let's look at what the quarterly chart, right? So the quarterly chart makes sense, is also building its own kind of wick. And so, if we don't get some kind of massive resolution, either bullish or bearish in December, that sets us up for Q1 of 2023 actually opening as an inside month. And then it'll just really be a question, or excuse me, as an inside quarter. And it'll really just be a question of how close to which side of the range is it, right? Is it closer to the top end of the range or the bottom end, right? And that level is the same, right? It's the 1786 to 1616. We had such a volatile month that has set the sort of parameters, the high and low for the entire quarter, which makes sense. And so that's the picture for gold. It really is all about, did we get that 8-year cycle low? And with this pullback that we're getting, so far it's not been crazy bearish to tell us, oh no, we're still declining. But it also does open up questions, where do we net out on the on the higher time frames in terms of being able to make a higher high and hold a higher low sort of thing, right? Because we're certainly in the timing band. And so if we move on to silver, so silver topped out day 22. It's still falling. And for silver, that $20.40 area is pretty, structurally, you'd ideally want to kind of hold that. Because if we fall below that, there's not a lot of sort of, you have this one daily candle on November 4th, right? Which has a high at 2090 and a low at 1940, right? And so you're really looking at a move down to another dollar down, maybe even, which actually wouldn't even be that much for silver in terms of percentages, but just wouldn't be very healthy for this chart because you had this kind of consolidation. And so you definitely wanted to try to kind of hold this, ideally. That's your daily. And on the weekly, it's certainly looking like we could have had our weekly cycle top, which is probably the most significant thing here, right? Like if we continue this down move this week and we close below the low from last week, which was $20.39, that signals that might have been our top on week 11. And it wasn't even that much of a rally. Certainly nothing like this one, like the rally that we're all thinking of, right? And on the monthly, still green, which is helpful, but it's going to be an inside month, kind of similar to what we talked about for gold. And if we look at GDX, so GDX is interesting because it's now consolidating basically in the same zone for 3 days now. And that was a zone where we kind of filled a gap from here. So, but we're now breaking down. We're just below, right? Always have to be aware of the possibility of a false breakdown, of course. But for GDX, we could be heading to the $26 area. I would think that's the cluster of highs we have. This kind of triple top here. Wouldn't be surprised to see us kind of test that from above, and holding that would be really bullish. And obviously, breaking below it would not be. I would say breaking below it, but having some kind of false breakdown, definitely have to be aware of that. And on the weekly chart, similar to silver. In this case, it's week 7. In silver's case, it was week 11. It has the possibility to signal our weekly cycle top, that we're starting to descend into the weekly cycle low after a week 7 top, which obviously wouldn't be great. And on the monthly, same kind of deal. It's going to be an inside month, so we're really going to need to get outside of that range at some point. So that's the picture for precious metals. Thanks for watching.